Hello everyone. Update regarding the US government shutdown and the US market reaction. There was an announcement that Trump and Modi is going to meet. So when and where? What S&P Global's report regarding the petrochemical industry? And finally, update regarding the RBI's last Wednesday interest rate decision. All we are going to discuss in this today's market report video for 3rd October 2025 for the Indian stock market in terms of Nifty and Bank Nifty. As we discussed in the last Wednesday pre-market video, during Tuesday night, both Republican Party and Democratic Party both submitted their own proposed funding bill. Unfortunately, both the bill didn't get the required 60 votes in the US Senate to pass. Hence, from Wednesday 9:30 AM Indian Standard Time onwards, US government have been shut down. The last US shutdown before this was from Trump's first presidency in 2018 December to 2019 January period. It lasted for 35 days. However, as per US government budget office, the last shutdown only costed US economy about $11 billion US. US is a $30 trillion US economy. So in that $11 billion US is very minimum, negligible quantity. Hence, US market not even bothered about the shutdown. And if you see the index reaction, both the days all three US major index closed positive. If required, please pause and have a look. Top one is Wednesday night closing and bottom one is last night closing. And in both days, both S&P 500 and Nasdaq reached the all-time high value. S&P 500 closed above 6,700 mark and Nasdaq closed around 22,850 mark. Part of the reason market was expecting good employment macro data, which is set to release tonight. So global momentum is okay and good despite the fact US government is now shut down. Then about oil, on this coming weekend there is a schedule for the OPEC Plus countries meeting and lot of research firms like JP Morgan, HFI Research all are projecting that Saudi Arabia wants to claim back its lost oil market share. So potentially for the November month OPEC Plus countries could agree to raise the oil production by 500,000 barrels per day kind of. If so means then this will be triple the times of the October month increase, which all reduced the oil price further 2%. At the time of this video, WTI crude trading $60.5 per barrel and Brent crude trading near $64.5 per barrel. Moving to Indian ADR, if required, please pause and have a look. Here, the change percentage is for last two sessions. Between last night and Tuesday night. Since on Wednesday, Indian market reacted for the Tuesday night data only. So, compared to Tuesday, last night, ICICI Bank and Reliance GDR alone closed positive, whereas the other three major stocks closed negative of around 0.5%. Which all okay, but the problem is on Wednesday, Indian market closed significantly positive. So that positivity for some reason didn't reflect at all in the ADR stocks. So if you calculate the arbitrage, only Reliance GDR is closer to neutral. All others, both IT and banking stocks indicating the negative arbitrage of 1 to 2%. I hope it won't materialize today. If so, then it will wipe off all the Wednesday gain. Anyway, GIFT Nifty haven't opened yet today, whereas based on yesterday morning, it traded at 24,947. Equating that with the spot market, it's indicating flat to negative opening, not crazy low like what ADR stocks are indicating. So those are the things happened on the dollar market. Moving to the India related info. First one, yesterday Malaysian government informed Indian government that US President Donald Trump is visiting Kuala Lumpur for the ASEAN Summit, which scheduled to happen this month between 26th to 28th. So this is confirmed. Then from India side, so far there is no official confirmation, but from the unofficial source, there are the preparations for our Prime Minister Modi to travel. Hence, if the travel is confirmed officially means, then it would be considered as positive. Then the second news is about the petrochemicals. Yesterday, S&P Global released a report that Indian government is pushing heavily for self-sufficiency in the petrochemicals by planning to do capital expenditure of $37 billion. So as a result, they are predicting by the year 2030, the global new capacity addition, 1/3 of that expect to come from India. This is a very bold claim. If this happens, then I personally think Reliance and ONGC will be the beneficiaries. So, according to me, this is positive for those stocks, but there is a potential that market may just shrug off this report. And finally, coming to RBI's MPC meeting update, as expected last night, RBI kept the interest rate unchanged at 5.5%. However, in the press conference, RBI governor hinted for the potential interest rate cut in the upcoming December month meeting. That's one of the main reasons why Indian market rallied on last Wednesday. Regarding policy stance, they kept same as last meeting, neutral stance. Then they reduced this year inflation projection to 2.6% from previous 3.1% and finally increased the full year GDP growth rate to 6.8% from previous projected 6.5%. On the liquidity side, as of September 30th, Indian Commercial Bank improved the liquidity surplus of 78,000 crore rupees. However, in order to improve further, RBI announced the CRR cut in two phases. First phase 25 basis point cut will be effective from the coming Saturday, and from November 1st onwards, then the second phase cut 50 basis points. Basically, market was expecting only 25 basis point cut, but RBI announced two cuts, one from Saturday and another from November 1st. I mean, this is what my understanding. From Saturday onwards, the CRR will be 3.5%, whereas from November 1st onwards, CRR will be 3%. Please confirm whether my understanding is correct or not, since RBI announcement is very confusing. Either way, it's a very market-friendly MPC meeting. If RBI proceeds with this planned 75 basis point cut CRR means, then our banks may not have liquidity issue in December month. So it's a very positive. So as a summary, US market closed positive in the last sessions. So global momentum is very good. However, there are reservations in Indian ADR. Don't know why. This CRR cut is positive for banks, and S&P Global Petrochemical report is potential positive for Reliance and ONGC. And finally, if Indian government confirmed about meeting between Modi and Trump means it's a psychological positive. Let's see how all playing out. About institution, last Wednesday also FI was net sellers, the net sold for 1,600 crore rupees and DA net bought for 2,900 crore rupees. And as per participant wise open interest, after the monthly expiry, 68% new put options and 32% new call option open interest were added last Wednesday. Then stance-wise, from negative 3.9%, proprietary traders turned positive. At the end of Wednesday, they were holding net 1.4% open interest favoring bullish position, and retail traders reduced their stand but still respectable net 9% open interest favoring bullish position. However, on the other hand, FII having net 10% open interest favoring bearish position. I mean, after expiry, they were holding like net negative 15%. So they significantly reduced their negative stance. Then, as per stock open interest, RBL Bank, AU Small Finance Bank, Delivery, Tata Elxsi, Havels, Torrent Power and Petronet are some of the 37 stocks that got an increase in open interest along with a negative close, indicating the short build-up. On the other hand, IREDA, IEX, LIC, KPIT Tech, PFC, Bank of India, Nuvama are some of the 121 stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. Then about the things to look out, in the afternoon all Europe PMI data is due to release, and in the night for US their unemployment rate, average hourly pay increase and government non-farm payroll addition data for September month are some of the important items we need to keep an eye out today. Coming to technical, last Wednesday Nifty opened flat, but as the day progressed it increased and managed to close above 24,800. Thus on the daily chart, Nifty formed a long bullish candle and climbed above the 100x moving average. In addition, RSI jumped to 47 from below 40 and showing the positive crossover, which all indicating the bearish momentum is fading. However, on the negative note, Nifty remains below the short and medium term moving averages and they have flattened after trending downward during the recent fall. Hence, as an overall, all of this indicates a potential shift in the momentum, but confirmation is still required with a move above the key resistance level. And Nifty needs to surpass and sustain above 25,000, the middle of the Bollinger Band, and 50% retracement of the recent fall for a sharp upward journey. Until then, it might see consolidation and range-bound trading with 24,600 acting as the support, a level that has been defended in the previous 3 sessions. In case of Bank Nifty, it opened 20 points gap up and increased throughout the session, then closed above 55,300. Thus on the daily chart, Bank Nifty formed a strong bullish candle and surpassed all key moving averages in a single session. In addition, it also formed a higher high higher low formation for another session and reached close to a falling resistance trend line. Furthermore, RSI and MACD showed a positive crossover, indicating strengthening bullish momentum and a potential breakout if the resistance trend line is crossed. Hence, the 55,500 to 55,600 zone will act as the immediate resistance, and if Bank Nifty manages to move above, then the pullback can extend further towards 56,000 followed by 56,300. On the downside, the zone of 55,000 to 54,900 will act as the crucial support. On the options front, the maximum call option open interest was at 25,000 strike, followed by 25,500 and 25,200, with maximum new call option rating at 25,500, 25,000 and 24,950 strike. On the put side, the maximum open interest was at 24,700 strike, followed by 24,600 and 24,800, with maximum new put option rating at 24,800, 24,700 and 24,600 strike. Thus, from options data, it indicates that Nifty is expected to remain in the range of 24,600 to 25,000 in the near term. So that's all in this video. Hope you got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.